Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reineck, and this week I'm joined by Zacks stock strategist Ethan Feller to talk about one of the hottest topics out there right now, AI. And every week he is on AI this week on X, in the X Spaces on Friday mornings. I think that's like 11 o'clock, Ethan, 11 Central Time, noon Eastern time.
It's been noon Central for the last 2 weeks, but
it has.
Just
okay.
On the schedule. Yeah.
Okay. So you might want to check that out. I've been listening in. If you don't have time on Fridays to listen in live, you can always listen into the recorded conversations over there. And he's joined with Kevin Cook, our other Zacks senior stock strategist, talking about everything going on in AI. So that's why I decided to have Ethan on the Market Edge this week to talk about AI stocks again. We've covered them many times here on the podcast, most recently with Mark Zinski, Zacks small cap analyst, giving us some small cap ideas. But I have a feeling Ethan's going to share with us some larger cap ideas because those are the ones that seem a little more prominent right now. I also have an idea or two of my own. So this is going to be an interesting episode about AI because Ethan, as you and Kevin talk about every week, it's changing like almost every day.
Yeah. It's very interesting to follow. First off, thanks for having me on, and thanks for the plug on our X or Twitter space. And it's you got to keep on top of it every day if you want to know what's the main news, what's the drama, and there is a lot of drama, especially and some big personalities from Elon Musk and Sam Altman, and that's part of what we cover. And yeah, we look at hot new products. Collaborations, we'll look on the back end with what's going on in the semis and in the foundries, and we just try to stay on top of it.
So just preparing for this podcast and after listening to your guys' spaces for a couple of weeks in a row, it seems to me that investors are a little confused about how to invest in AI. We all know NVIDIA. We all know the semiconductors. There's a bunch of those we could invest in. But once we get out of that space and maybe some of the LLM spaces, Microsoft, Alphabet, actually all the Mag 7s, they're all in it in some way, it seems. Once we get past that, then it seems, what do I do? Who else is out there? Is there anyone else out there? Where should I be looking to invest in the AI revolution? Outside of those main areas, because a lot of us already own a lot of the Mag 7s. If we own the S&P 500 or the triple Qs, we might own the Mag 7 ETF, any of that, any kind of tech ETF. We already own all of those. But where else should I be focusing on to, get into this trade, which does seem to be growing some momentum again?
Yeah, it's a really good question, and it is kind of not as straightforward as you might think. Trying to get involved in them, you noted the Mag 7. You get some exposure, and there's other companies that sort of get lumped into like the theme. They just sort of say AI on an earnings call or something, or even with the big platforms like OpenAI and Anthropic, which are still private, and that's another problem with kind of getting in on this, is that it's still so much, even like a lot of big raises are done in the private market. So there's not we have a real slowdown in IPOs over the last few years. So there's not a whole lot of way to get exposure. And there's some issues, even if you could get exposure to some of the main LLMs like OpenAI and Anthropic, is that they're having trouble like monetizing, really. I mean, it's really expensive to run this. I think, Tracy, you shared, or maybe I did, I forget, a couple weeks ago in our work chat that Musk's XAI is losing $1 billion a month. So they're expected to lose $13 billion over the next year. and they're trying to raise like 9 right now, half of which they're going to spend in the next 3 months. So you got to be careful with how you get your exposure, and I think like the infrastructure is still probably the best way to really make money, and a handful of like the base really important ones, I'll get into them, are still very fairly priced, not excessively bid up or anything like that. And so yeah, there's a few different ways to do it. And then I think I know you've talked about the energy exposure, which is also probably a good way to do it. I mean, in general, we're going to have more burning a lot of energy just to get these systems to work. And then you can kind of jump forward, like these in-between tiers. And I've found a way, it's kind of like an organic way of finding just like smaller companies that are not the LLM companies, and they're not sort of just they're not just sort of slapping an application on top of the large language models, but really they're just implementing it into their business in a really smart way that leverages the technology. So it's an interesting way to try to find good access to the market.
So by organically finding them, does that mean you're using the Zacks rank, or you're looking through the number ones and number twos, and somehow you just kind of stumble across one that has a company that has big earnings growth, and it's not really a well-known name. And then when you dig deeper, you find out, oh, there's data centers, or, oh, there's something with AI mentioned, is because I found a couple stocks that way so far. And so I'm wondering if that's what you do too.
That's pretty much exactly it. Like anything that gets too much attention AI wise might not be good. It's too much hype, or it's too bid up, or it's not even a real thing. Versus, yeah, exactly. Just like, I've been talking about a stock for a few weeks now, and it recently turned profitable. It's got really good earnings upgrades, and because it just became profitable, sentiment was in the dumpster, and it's extremely cheap now. And yeah, and they have a smart way of using AI and to improve their business. So yeah, it's pretty much that. You're just doing typical sort of quantitative looks at stocks using filters or using the Zacks ranks to find stocks that look good. And yeah, some of them are using AI.
Now, I don't know about you, but when Dan Ives and Wedbush launched the Dan Ives AI Revolution ETF recently, I was kind of excited, not because I was going to go invest in it, but because I could see the list of the holdings and to see what was in there, because I thought, oh, maybe I'll get some ideas from his ETF. But not surprising, because of the type of product that it is. It was mostly the big cap stocks that we all know, including all of the Mag 7s are in there, a lot of the semiconductors, and a bunch of other big cap tech names. So that didn't help me. But maybe someone sometime soon will launch a small cap AI Revolution ETF. That would be very interesting. But I think we're just not there yet on the number of smaller companies that can, safely describe themselves as AI Revolution kind of companies so far.
Yeah.
But, in another year or two, I think we could get there.
Yeah, definitely. I mean, it's an easy one, but it kind of just, it makes sense to have the technology bubble early 2000s as a historical analog. And it was like, yeah, the Oracles and the Microsofts, they did well the whole time because they were critical to it. But, as it matured and as it progressed, you had a lot of smaller names, just as, thousands of companies IPO'd then. I don't know if we'll get that many this time, but, and just as many eventually went under, but a few of them last, a few of them find their way. And yeah, I think that's how it's probably going to go from now.
Okay, like on the same note, I did want to talk about a stock that I have found recently, but I found it through the insider trader portfolio. And that's because an insider bought at this company. But I was a little suspect when I saw the name of the company. So it is a small cap, market cap of $1.9 billion, and it's Solaris Energy Infrastructure is the name. Ticker S as in Sam, E as in Edward, I is the ticker. And when I saw the name, I was like, Solaris. Well, I thought it was a solar company, Solaris Energy. I'm like, what do I care about solar right now? That seems iffy with the tariffs and everything else going on. But when I looked at it a little closer, I discovered it's really on the service side, oil and natural gas, which again, nobody really wants right now, like oil, natural gas, but they are in power solutions and logistics and really starting to transform the company in the power solutions side, which is powering a lot of these big like manufacturing plants, chemicals, refineries, and then, of course, the keywords data centers is listed on there. So they really said in an investor relations update that they gave like to investors in May that they see multi-year unprecedented growth. And that's because the data centers need massive power. And so this is kind of an area that I'm really intrigued about. You're showing the sales estimates and the earnings estimates off Zacks.com right now. And I mean, look at the sales growth that's expected there suddenly this year and next year. We're talking, double digits, massive growth for a company of this size, really. And then on the earnings side, similar double digits. Look at that 32% gain for 2025, 91% gain for 2026. And the stock isn't cheap. It's trading around 42 times, but we're not buying the cheapness here. I do want to buy the growth on the AI revolution. So insiders did buy this stock recently. And so we dove in on the insider trader, but I was surprised when I dug in. Oh, wait, again, this isn't solar, data centers, huge growth. This is kind of what, we're talking about when you have to find these companies organically, because I've looked at a lot of oil companies on the service side many, many years, and I didn't even run across Solaris prior to this. So it was a higher Zacks rank recently, but I think it was a 3 there now. And I would be watching this. Obviously, I own it in the insider trader, but it's these kind of companies that are kind of hidden away. There's no way of knowing that this is like an AI infrastructure, I like to say, but it does have infrastructure in the name, which is, nice. But I would not know unless I drilled into their press releases and, their earnings and their annual investor relations update, what was really going on here.
Yeah, that's a really interesting one, Tracy. And for those who are just listening, sales are expected to grow 64% this year and almost 42% next year. So it's a lot of growth. And, I mean, as you noted, it has a premium valuation, 42 times earnings, but there's a lot of growth there too. So, and you got that sort of thematic tailwind with it too.
When I was listening to you're going to show us let's see the chart.
So it's pretty much sideways year to date.
Yeah.
Got hit in April like the rest of the market. But,
the thing with some of these smaller cap stocks in this space is it's not like they're being talked about on, the financial networks or, they're not on anybody's lips. You guys aren't even talking about them in like your spaces on X. Yeah. And so it kind of moves along with the other small caps. And then this one has the disadvantage of being in oil and energy kind of as its industry, which is really in the doghouse right now. So I'm surprised it's doing as well as it's doing, giving all those headwinds, but it was just upgraded by an analyst. And so it got a little boost off of that. And then we'll see on the next earnings report what happens. But, the insider definitely thought, hey, I'm getting at least a deal partially on this thanks to the weakness in the shares. So,
Yeah. I mean, it is up. I mean, it's doubled since the lows in April.
right.
So, I mean, it's getting some love over the last 3
Yeah.
months.
Yeah. So now, when I've been listening to the X or Twitter spaces you and Kevin have been doing, I noticed on the last episode when you were talking about some stocks in this area that you brought up a favorite of yours now, which was Marvell. And I was surprised by that, ticker MRVL for Marvell, because I haven't heard that many people talking about it in terms of AI revolution. So what is it about Marvell that you like right now?
Yeah. So, we talked about that sort of tier list of importance in the industry. And, we got electricity and power is, absolutely critical, almost definitely going to make some money off of this trend. You got, chip fabrication, which we'll get into in the next one. And then you have the semiconductors. And it's been all NVIDIA pretty much for the last 2.5 years. And they're just way ahead of the game. Their GPUs and their data center products are just industry standard. And AMD has, they've been talking up a lot that they're going to come out with their own server product that's going to compete with NVIDIA. I think they're saying end of this year. So, best of luck to them. But there's been little opportunity to get any other semiconductor exposure to it. And so something that I keyed into sort of at the beginning of the year was these custom AI, custom chips. They're ASICs chips, which is different than a GPU. They're built for just specific processes rather than general processing. And really, it's a large reason why these are starting to come in demand. So they have Marvell, and then the other big custom AI chip guy is Broadcom. And so now they have these growing segments in their business where they are selling these custom chips. So, their clients, their customers are primarily the big tech guys. You got like Apple, Amazon, and Microsoft are their clients. And basically they have AI processes on their back end that maybe aren't immediately customer focused, but sort of just their own business infrastructure that they're finding use for these custom chips. So, as I noted, Marvell and Broadcom are the two main custom chip developers now. And Broadcom is a much bigger company, a much more diversified company. Let's just see. So Marvell is just $61 billion company, whereas Broadcom is over $1 trillion, almost $1.2 trillion. And Broadcom has a very diversified business. They have smartphone chips, which is a huge part of their business. And they also bought VMware, software business. And it's a great company too, Broadcom. And I think AI, their AI segment is around 15% of their total revenue now and growing very rapidly. So it is one way to gain exposure, but I think Marvell offers a better opportunity just because as a percentage of their business, AI has suddenly become, I think, just under 50% of their sales. And so I think there's more asymmetry to the opportunity. And I was following this trend for a while, and I was really excited about it, and I thought it was a big thing to watch. And then we sort of got a lot of volatility in the beginning of the year, and I think semiconductors also kind of hit like a cyclical peak in the beginning of the year, and they got like hit really hard. I'm going to pull up the price chart of Marvell. You can see, it peaked back right in January at $126 and sold off all the way down to $50. So, 60+% correction, which is extremely painful. But it's picked up nicely off of the lows from $48 up to $74. And also, it's actually quite cheap now. And it's trading at just 25.3 times forward earnings. And you can see that earnings are expected to grow at 43% annually over the next 3 to 5 years. So it's got a PEG ratio of just 0.6, which I really like to see. I mean, you get sort of some downside protection when you have a company that is trading at a discount to its growth forecasts. And yeah, you can see it's got good sales growth, 42% this year, 18% next year. Earnings, 77% this year, 27% next year. So yeah, it's just a good, they're building their own little AI niche that they don't have to compete with NVIDIA, and they are playing a significant role in the AI build out.
Yeah, I see that they're a lot cheaper on a PE basis than Broadcom, which is hitting new all-time highs, but it's trading at 38 times compared to 25 for Marvell. And it is kind of funny. We do think 25 is cheap nowadays for these tech type of stocks. But it kind of is, given what a lot of the other ones, and even Solaris that we just looked at, which isn't even a tech stock, and that one is at 42 times. So yeah, 25 times looks like very attractive.
Yeah, and you can see it has good style scores too. C in value, but A in growth and momentum.
Yeah, for the AVGM. Yeah. Okay, what about some of the other big names that have been kind of in the news, like Oracle? For some of these, I get asked a lot, is it too late for me to get into some of these? They've run a lot. I guess that's kind of a bullish a view, though, that I'm getting asked, is it too late? Because, if things were really kind of crazy and speculation was going, no one would be asking me that. They'd all just be typing in. But I still do get asked, like, it's had this big run. It's at these new highs. Is it too late? But what do you think about Oracle here?
The chart looks compelling. I mean, that's a nice little bull flag and about to move to all-time highs. They're definitely also playing an important role. It's a little bit, more expensive, discounted to growth, 30.8 times forward earnings. Earnings growth forecasted at 12.6% over the next 3 to 5 years. So, you get a little bit less downside protection, but, sentiment and flows and all of that is about just as important as the fundamentals, really.
Yeah. What about the data center infrastructure type stocks? Do you have any interest in those? Have they been kind of overplayed now? I'm talking like Supermicro and those kinds of companies. Or because the data center build out is going to happen for a couple more years, is there still something, where we could be getting into those types of stocks?
Definitely. Data centers, again, it's kind of like I don't know if it's a perfect comparison, but like the oil refineries for, the AI and tech. Maybe it doesn't have huge growth, but they're just very well positioned. I think Vertiv is probably one of the better ways to do it. I mean, they're not actually a data center company. I think data centers is kind of a tough business. I think just because you got to refresh your chips probably every, I don't know what the cycle is, 4 or 5, 6, 7 years, something like that. So huge CapEx, but probably some decent margins. There's not a lot of labor involved, but certainly energy expenses. But yeah, I think Vertiv has been like one of the data center exposure plays, and as a service company, I think you get the best of both worlds, where it's kind of maybe a better business model, and you're also exposed to the data centers. It's got Zacks rank 3. I mean, this one was on the top of the Zacks rank for like 18 months. But, not excessively expensive, upper bounds, but 32.8 times forward earnings. Earnings growth forecasts at 28% annually over the next 3 to 5 years. So definitely a good way to take a look at, get some exposure to data centers.
Yeah, Vertiv, ticker V as in Victor, R as in Robert, T as in Tom. For those who are listening in, VRT is in the Zacks Value Investor, and we've owned it for a couple of years. But this was a stock that the Zacks rank basically discovered for us in there too. And it was trading around 16, 17 times forward earnings when I was looking at it and when we added it. And then the stock really took off. The earnings have too, but the stock a little bit hotter than the earnings. It got up as high. You can see on that chart when it hit those highs in early 2025. It was, like up there. Isn't that early? Yeah, in January. It was trading about 40 times. And I did feel like it had gotten a bit stretched there. But the Liberation Day tariff sell-off, wiped out a lot of that speculation. And it has bounced off that. But the earnings continue to slowly rise as well. Because the demand, as you mentioned, is still just there on the data centers. I think like every couple of days, there's an announcement about more data center investment. I think I just heard that Amazon is putting 54 billion into the UK now, and they'd put 20, they announced 20 into Pennsylvania, and somewhere else there was another 10 billion one. And I'm not saying that they're partnering with Vertiv on any of that necessarily, but, a lot of these Vertiv will be in there because they are partnered with NVIDIA in a lot of these data centers. So yeah, I like the way that the earnings are going, even though it's a little pricier now, but yeah, definitely. Okay. Is there any kind of secret area that we should be knowing about? I've kind of disclosed one on that energy side that not a lot of people are looking at, but do you know of any that have the AI kind of connection, but nobody's really talking about? I'm kind of putting you on the spot here.
Oh, yeah. Well, it's not too much of a secret just because I've been talking about it a lot for the last few weeks. I had a video on it or 2 videos on it, and I wrote a few articles on it, but there's this stock called Pagaya that I really like. It's got a very compelling setup. You can see it's got a Zacks rank 1. It's like a fintech company. What they do is they help lenders measure the creditworthiness of borrowers, basically, and they use AI and machine learning to aggregate more financial information from these people than just like a credit score. So it gives them some more granular information on borrowers. I guess it basically allows them to loan to people they may not loan to, and that grows their business. So, and they actually just got into their own loans. So the business is growing, and we can see it's really cheap. So that's sort of what it's got good growth and it's cheap. So that's sort of what was that that organic way that we were talking about before. It just came up on the Zacks rank, and I started reading about it. So we can see it has a forward earnings multiple of just 7.6 times. And it's kind of like a turnaround story. If we look at the chart, it's up a lot today. It's up 5% today. But, it was up to $400 at one point, and now it's just a $20 stock. It was up to $34, and it got all the way down to $8. So it's been on a wild ride. It was a company that was totally unprofitable for a long time. And I think if you're in that position for a long time, I think management was kind of a mess too. And when you're in that position for a long time, the sentiment just goes really low. And, you turn it around, you start making money, and you got good growth, 20% this year, growth in sales, 15.7% next year. Earnings are going to be up almost 200% this year, and then another 30% next year. So, I think it's a cool way to get into it. You have, instead of these very AI application focused, and like I said, a lot of them are in the private market. Something like Cursor, it's if that were available in the markets, I'm sure it would be pretty crowded, very expensive, and it's a really competitive thing. Like an AI coding app, basically. So I think it's cool to find these companies that are using AI in a smart and unique way. So I think that's kind of like a little secret way to get access to AI, because it's so powerful. And, there's these high level usages of AI, and they're brutally competitive, and there's hundreds of billions of dollars getting poured into it and all the talent there. So I think there's less edge there and more edge in these, you just kind of search around for these small cap companies that maybe aren't too expensive and, find a little niche.
Yeah. Yeah. They have a market cap of just 1.4 billion.
Yeah.
So that's even smaller than Solaris is. Yeah. That's what I like to see. Sometimes you don't know until you drill down into these, like that it has some kind of AI connection and that's helping the bottom line.
Yeah.
Also interesting that it's that cheap on the PE basis when the growth is there. So yeah, you're letting the cat out of the bag now, though. On this.
Yep.
So the ticker
it's been
for those
moving.
In, right, are P as in Paul, G.
Still cheap.
Yes, right. You've been doing it for 2 weeks, but everyone hates the small caps. So until they don't. So I feel like the time is coming. But
it really requires some digging, because I think the index misrepresents it. And then, the index has a problem where, okay, if you start growing and you start becoming a big company, you get yanked out of the index. So it's a tough position.
Are they US based?
No, it's an Israel based company.
Oh, okay. Mm-hmm. That's good to know.
Yeah. I wonder if that's also been a bump too, because I know the Israeli stock market has been up following this geopolitical stuff. Right.
But foreign stocks in general are, people are giving them a second look this year, I feel. So that is an interesting one. So that ticker is P as in Paul, G as in George, Y, PGY for Pagaya Technologies. Okay. I feel like we've covered, quite a few number of interesting stocks right now. All of them have growth because that's what the AI revolution is going to give you. So I know everybody's out there looking for these stocks, and we aim to please. So we're going to be having more episodes on AI stocks as we go throughout the year. Hopefully for the next couple of years, I'm sure we'll be having these. And there's going to be new names and further breakouts, and we aim to bring them to you. So let me recap the stock tickers again. We had Solaris Energy Infrastructure, that you think is in oil and gas, but it's more focused on power solutions with some oil companies as its customers. Ticker SEI. Then we talked about Marvell, ticker MRVL. We mentioned Broadcom. It's breaking out to new highs. Ticker AVGO. We had Oracle in there, ticker ORCL. Vertiv, which I own in my own personal portfolio and in the Value Investor. And just on a side note, Solaris is in the Insider Trader also. Ticker V as in Victor, R as in Robert, T as in Tom. And then we finished up with another small cap that you may never have heard of, Pagaya Technologies, ticker PGY. And I wanted to add a little note to last week's podcast, which was on the Zacks rank. Anyone who's still listening here at the end of the podcast, I had the wrong percentage on the Zacks number 3 holds. I knew that was messed up. That's why I couldn't get the math to work during the episode. But I said there were 80% in the holds. No, it's 60, which then makes sense. There's 5% in the ones, 5% in the fives, and then 15s in the twos, 15s in the 4, and then you have 60 in the rest of it. So no, that doesn't add up either, does it? Yeah, that adds up.
Yeah.
I'm bad at math today. But it is 60%, not 80%. But again, remember the number 3 holds. Doesn't mean it's like a bad place to be. Most stocks end up in the number 3 at some point because the Zacks rank changes daily. We have some number 1s on today's episode. So keep in mind, those are only 5% of all the Zacks rank stocks, of which there are over 4,000 having the Zacks rank. So those are our premier strong buy stocks. So if you listen this far, keep that in mind and go check out the other episode. You can find all of these episodes on YouTube. Go to YouTube on Zacks Investment Research. Subscribe to our channel there. You can get all of these on Apple, just in the audio podcasts. And we're also on Spotify, Amazon Music, and just about anywhere you can get podcasts. But be sure to get us somewhere. And I'll be back next week with some more stocks.